Hi, and welcome to my market report. My name is Mike, and this market report is about what impacts mortgages on a daily basis, mortgage rates. And we don't get into rate quotes primarily because there's plenty of other websites for that, but there's too many variables that go into it, and that could be a video in of itself. What we do is we get into the different trends, what's impacting them on a daily basis, if they're up or down, or even just going unchanged from the previous day. We do get a lot of intraday price changes, especially when we get a lot of volatility in the market. And we want to share that with you so that way you can be prepared if you guys are in the process of buying or buying a property or looking to refinance. And if you're looking to want to kind of float and kind of wait, see if the rates get better or not. But again, it's always one of those little game things you have to be careful on. A little bit about myself is I am a loan officer. I do work with the national lender. So if you guys got questions about rates or want to be able to get a rate quote, I'll be more than happy to do that one-on-one. If you guys are looking to got questions about mortgage programs, or if you guys are looking to refinance or purchase, I am available as well. So please feel free to reach out anytime. So without further ado, why don't we jump into this report? We'll go over the first item, what we get every Thursday, so jobless claims. We'll start off down here. So last week, we had a 498,000 people apply for unemployment. However, that did get revised a little bit higher to 507,000. It's not showing on this report here, but it did actually get revised slightly higher. Forecast for this week's report was supposed to come in at 490,000, and it came in a little bit less at 473,000. So good news is that we're seeing this dwindle much almost every week. It seems like we're seeing this go down further and further. And if you look at continuing claims, we see this coming down as well. So people are getting off unemployment and most likely getting jobs. So those are the good news. The big thing for today is more inflation data. If you remember, we had the CPI yesterday, and that is on the consumer basis. However, today is the PPI, or Producer Price Index, which measures that of the wholesale side of things. So this doesn't always get the same respect as consumer side, but it's something we definitely want to keep our eyes on. So the big headline news is the PPI is it was up at 1% back in March. Forecast calling for 0.3%, but came in a little higher, kind of like our CPI one yesterday at 0.6%. Now, the big thing we can look at is we take out food and energy because those are two variables we cannot control. So we get our base, and that is the core PPI. And this is really what we'll look at is in March it went up 0.7%, forecast gone for 0.4%, and it kind of matched that at 0.7%. So it continued going up at a pretty hot pace here. And last but not least, here's the year-over-year version of that. So we had 3.1% year-over-year back in March. Forecast supposed to show uptick of up to 3.7, and it went all the way up to 4.1%. Now, if you back to the PPI one, if you look at put that food and energy back into it, it went from 4.2% to 6.2, so it went up 2%. Those are pretty some sharp items there, and of course the Fed is saying these are transitory. We'll have to kind of this gonna have to wait and see if once the bottleneck reopens and we get back to kind of some normal state, if these costs will settle down and go back lower, back to kind of pre-pandemic levels, or will we be accepted and keep those same levels and uh, keep keep with the higher pricing? That would be the question. So let's jump ahead here. We also had a 30-year bond earlier. It was okay. It wasn't bad. It wasn't great. It wasn't bad. It just came in okay. We did have a slight market reaction where the bonds did dip a little bit, but they kind of went back up. So they're not really as much of a fact. It really didn't play too much of a factor today. Um, Stocks are up today as a result. So after that big day yesterday, we had some massive selling both on stock market and bond market. We had some pretty massive selling yesterday. It might have been an overreaction, so people are kind of buying back into it. And again, inflation is basically erodes away the wealth. So for bonds, it takes away the value from that. Stocks, it does the same thing, erodes the value of it. It basically makes dollars. If it's too much, the U.S. dollar could become almost worthless. So this is why it's a bit of a concern if we get, if it gets out of control. So to keep it in control, the Fed typically tries to keep around 2%, and the Fed has been pretty persistent. And the concern is that, you know, the investors are worried that maybe these aren't transitory expenses that the Fed keeps stating, and that even though we had low job numbers and this higher big spike in inflation, that maybe the Fed may reverse course, even though they're pretty persistent in their same message, that maybe they might start tapering on their mortgage-backed securities and their treasuries purchases. They may scale back a little bit on those. Those are different things, even though they said they're going to continue buying, or maybe make some rate changes sooner than expected. So those are some of the concerns that the investors have, even though they would love to see some at least tapering, you know, ahead. So here's the mortgage-backed securities. As you see, we did close below the 50-day moving average. We did kind of work our way back upwards a little bit. We're up about 11 basis points so far today, so we will see a slight improvement from where we left off yesterday, which ended up being closing down 44 basis points. And then here's yields. Yields are down a little bit. We had this level here about the 168, 169 level. We did break above that, but today we're down a little bit. We're down to about just under 1.67 so far for the day as a result of that. So again, we'll keep our eyes and ears open. Hopefully, we can get some better news down the road. But these are some things we'll have to kind of watch for. Inflation will be the main topic since that kind of put some. As we saw back in January, we did hear talk about in January and February. We did hear about inflation. There's concerns, and it kind of went away a little bit. Now it's kind of back again, and so we'll probably have to deal with this for some time now. All right, folks, that's a wrap. If you guys got any questions or anything else I can help you guys out with, please feel free to reach out. Otherwise, you guys have a great rest of the day. We'll look forward to seeing you in tomorrow's video. If you like these videos, please go ahead and hit the like button. They help out the channel, and greatly appreciate it. You guys have a great rest of your day. Thanks for watching. Bye-bye.